For decades, SWIFT has been the backbone of global banking. It's trusted, widely used, and handles trillions of dollars daily. But let's be real, it's far from perfect. Transfers can take days to clear. Fees pile up with every intermediary involved. And for many people and businesses, it's just too slow and too expensive. Now, imagine a world where moving money across borders is as fast and simple as sending an email. No waiting for days, no hefty fees, and no middlemen slowing things down. This is the vision behind XRP and RippleNet. But can it really replace SWIFT? That's the million-dollar question we're diving into today. To understand the potential of XRP, we first need to understand what SWIFT actually does. SWIFT, or the Society for Worldwide Interbank Financial Telecommunication, isn't a payment system in itself. It's more like a messaging network that tells banks how to transfer money. For example, if you're in New York and you want to send money to someone in Tokyo, SWIFT sends the instructions. But the money itself takes a more complicated path. It moves through a series of correspondent banks, each taking a slice of the pie in fees. This process works, but it's slow and costly. It was revolutionary in the 1970s, but today? It's starting to show its age. That's where Ripple and XRP come in. Ripple is a blockchain company with a bold goal: to revolutionize the way money moves around the globe. XRP is Ripple's native cryptocurrency, designed to make cross-border payments faster, cheaper, and more efficient. Unlike SWIFT, XRP doesn't just send payment instructions. It settles the actual payments in real time, without relying on a chain of intermediaries. So how does it work? Let's say you're sending $1,000 from London to Mumbai. With XRP, your pounds are converted into XRP, sent across the Ripple network, and then converted into rupees, all in a matter of seconds. The speed is mind-blowing. XRP transactions settle in just 3 to 5 seconds, compared to SWIFT's average of 2 to 5 business days. And the cost? Fractions of a penny per transaction, compared to SWIFT's fees that can reach $50 or more. Now let's talk scalability. XRP can handle 1,500 transactions per second. That's on par with Visa, one of the fastest payment systems in the world. SWIFT processes millions of messages daily, but the transactions themselves still take time to clear. So, with all these advantages, why hasn't XRP already replaced SWIFT? The answer lies in two big hurdles: adoption and regulation. SWIFT is deeply entrenched in the global financial system. It's used by over 11,000 financial institutions in more than 200 countries. Ripple, meanwhile, is still building its network. Ripple has partnered with major players like Santander, American Express, and Standard Chartered. These partnerships show that banks are interested in Ripple's technology. But getting widespread adoption takes time. Then there's the elephant in the room: the SEC lawsuit. In 2020, the U.S. Securities and Exchange Commission filed a case against Ripple, claiming XRP is an unregistered security. This legal battle has created uncertainty, especially in the United States, where financial institutions are cautious about adopting XRP until the case is resolved. Despite this, Ripple has continued to grow internationally, expanding its network and forming new partnerships. Let's also address the question of decentralization. One criticism of XRP is that it's not as decentralized as other cryptocurrencies like Bitcoin. Ripple Labs owns a significant portion of XRP, and this has raised concerns about whether it's truly independent. Ripple argues that centralization isn't necessarily a bad thing. Their goal is to provide stability and trust, which are essential for gaining the confidence of banks and financial institutions. But let's not forget the competition. SWIFT isn't standing still. In response to the rise of blockchain technology, SWIFT has launched initiatives like SWIFT GPI, which offers faster and more transparent payments. So, is it really a battle between the old and the new? Or could XRP and SWIFT coexist, each serving different needs? Ripple believes in a hybrid future. Rather than replacing SWIFT entirely, XRP could complement it, enhancing its efficiency and reducing costs. Think of it as upgrading from a rotary phone to a smartphone. But let's take a moment to imagine a world where XRP fully replaces SWIFT. What would that mean for businesses, banks, and even you? For businesses, cross-border payments would no longer be a bottleneck. Imagine a small business in Argentina trading with a supplier in China and settling payments instantly, without worrying about high fees or currency conversion headaches. For banks, XRP would eliminate the need for pre-funded accounts in foreign currencies, freeing up billions of dollars currently tied up in Nostro and Vostro accounts. And for individuals? Sending money abroad to family or friends would become faster and cheaper than ever before. Remittances, which are a lifeline for millions of people, could be transformed overnight. But let's not get ahead of ourselves. Replacing SWIFT isn't just about technology, it's also about trust and compliance. SWIFT has been around for over 50 years, and that kind of legacy builds confidence. Ripple will need to prove that XRP can handle the same level of reliability, security, and compliance with international regulations. So, can XRP replace SWIFT? The answer might not be as black and white as you think. XRP has the potential to disrupt traditional banking, no doubt about it. But whether it will fully replace SWIFT or work alongside it remains to be seen. One thing is clear, though: the financial world is changing, and XRP is at the center of that transformation. What do you think? Is XRP ready to take over, or is SWIFT too deeply rooted to be dethroned? Let us know your thoughts in the comments below. And if you enjoyed this deep dive, give this video a like and subscribe for more insights into the world of crypto and finance. Thanks for watching, and don't forget, change starts with a ripple.